basically we will be concentrating on entire syllabus of financial market. This is your financial system. Under that, you have 9 topics, 10 topics altogether. Then basically I'll be covering under financial systems. Initially a derivative instrument, then move on to pricing of financial assets, then continuation of financial market, and finally portfolio theory and the valuation techniques of how the mergers and acquisition. This is a new part of your syllabus, which IVSL has included this time, which is more important for you to learn the valuation techniques on mergers and acquisition, how the acquisition and all these things happening. And especially this syllabus covers financial markets. So when you say financial market, basically we will be talking about the present situation of how the financial market operating. Now, I think most of students are here bankers, right? Or the students working in financial companies, finance companies. So basically, you have kind of knowledge, you have kind of relationship. What we are talking. So basically, we'll be talking about the real situation, what's happening in Sri Lanka, basically, and we will be moving to some global aspects as well, how the financial markets are operating. So because we can't isolate Sri Lanka, especially, rather than isolating a global aspect. So whatever the happening around us in Sri Lanka as outside Sri Lanka is really interconnected. So basically, we'll be talking about the global aspects as well, how the global aspects impacting or the affecting our financial markets here in Sri Lanka. So when you say financial markets, basically financial products are service and all. So before we start the session, I like to talk about the prevailing present situation in Sri Lanka, and in terms of interest rates and especially the exchange rate and all. So we have been discussing 2 weeks ago, Sri Lanka is operating under low regime of interest rate. We knew that when this government came into power 2019 November, we had double-digit interest rate in Sri Lanka, prevailing interest rate in Sri Lanka. We have been decreasing that trend to one single digit, but AWPLR, average weighted prime lending rates and all, what our AWPLR, when banks are using to lend, they are special customers or the corporate customers, prime lenders, we are using that. Basically, that is the lending rate we take into account to see whether the interest rates have come down or interest rates have gone up. And also the treasury bill rates, which is the risk-free rate prevailing in the country. And we'll be talking about later in detail how this auction thing and everything, but I'm just giving you a nutshell before we move into this syllabus topics, what's happening around us. So that is important for us to learn, rather than now in this syllabus you will not learn much on theory. So basically we will be talking about much on reality. So what's happening actually, economic fundamentals and all those things. So it's important for us to learn and for us to get kind of idea what's happening around us, especially when you are talking about financial markets and the products and the institutions in the financial markets are. So we'll be talking about government securities, treasury bill, treasury bonds, rupee denominated instruments. We'll be talking about under this syllabus SLDBs, that is the only dollar denominated instrument issued by locally by Central Bank of Sri Lanka to raise dollar funds for the government. and we'll be talking about ISB, international shower remote. All these terms you must have heard, right? Definitely you must have heard. You say pressurable, pressure reborn, SLBB, you must have heard, definitely. So we'll be learning in depth how these products are offering, how these products are categorized, how these products are structured, right? And the purpose of these products, right? And also we'll be discussing under this financial market uh, shares, equity, which is very important and which is a booming aspect at the moment. So we have reached 9,000 level, SI all share price index, a history high, and there are alternative investment as an alternative investment. So the importance of having investment in share market is also important. Then we will be learning debenture, another funding method, another method of raising capital, kind of capital. Now, if I say debenture is a liability from the issuer side, but it can be treated as capital. When banks are issuing debentures, if it is convertible debentures, they can take this debenture into capital, right? So debenture basically we treat as a liability. But nowadays, to maintain the capital adequacy ratio, right? Now every bank, every finance company has to maintain capital adequacy ratio, which is prescribed by Central Bank of Sri Lanka. If you don't maintain that capital adequacy ratio, which is a breach of the regulator. So basically, it's a regulatory breach. So basically, you will be breaching the regulator. So you have to maintain every month, basically every quarter, but every month, white financial statements are published quarterly. But the only thing you'll have to maintain every month. Otherwise, Bank Supervision Department of Central Bank will ask, or you'll be charged whatever the penalty if you don't maintain. So many ratios you'll have to maintain. Liquidity asset ratios. So under Basel III, we'll be learning liquid asset ratios. Anyway, there it was 20%, and under Basel III, you will be learning leverage ratio, net stable funding assets, net stable funding asset ratio, then leverage ratio, LCR, liquidity coverage ratio. All these new ratios coming under Basel III. Now other banks now in the world, some countries have adopted Basel IV, but here in Sri Lanka we are still Basel III, which is very cumbersome task for banks, right? It's very difficult to maintain this capital adequacy ratio at the moment. Now last year, due to this pandemic situation, Central Bank has reduced capital adequacy ratio to be maintained by banks by 1%, 100 basis point. So you'll have to maintain, earlier the norm was 14%, now the banks have to maintain 13%. Systematically important banks. Central Bank has identified two systematically important banks, which is Bank of Ceylon and Commercial Bank, and they'll have to maintain 13%. So other banks, the second category, People's Bank and HMB, they'll have to maintain 0.5% below. So very informative, and we'll be learning how this loan syndication, which is more important for financial markets when you are dealing with, and sort of discussed before we end up this session, and the cryptocurrency, digital currency, which is not in your syllabus, but I'll be taking some discussion point to discuss with you all cryptocurrency. Now, cryptocurrency is a digital currency. Now, with this Port City project coming into effect, I think there will be exchange for digital currency. So it is worthwhile for us to get to know what this cryptocurrency or digital currency is. So, right now, some countries have completely banned on cryptocurrency. China fully banned, but there's a problem coming. The majority of stakeholder ownership vested with Port City is with China. So then, how the exchange is going to happen or going to occur is a problem. But there will be a cryptocurrency exchange in the Port City, and they are working on it. So one state bank is involving in this. So you will be getting that. And recently legalized two countries, El Salvador and Ukraine. Those are the legally accepted countries. Cryptocurrency has been accepted legally by these two countries. But the other countries, of course, US, UK, Canada, are positive. They are actually positive on adapting. And in Sri Lanka, there is a committee appointed by the Central Bank of Sri Lanka, the possibility of launching or possibility of adaptation of cryptocurrency, and the committee is still there. And of course, we can purchase, we can invest in cryptocurrencies, which is now these days don't do. It is monitored by banks, by ULR. It's an e-commerce payment, right? So basically, you will be faced. And in Sri Lanka, which is not legalized, which is not non-legalized, so they are silent. So they are not telling not to invest. They're telling to invest either, right? So that is indifferent. So basically, that is your risk. That is your risk. Very new thing, and some banks, some countries have already adopted, right? We'll be touching on cryptocurrency as well, and also with regard to the global aspects, we'll be learning. When we talk about small thing, I think there is a topic for you to study this exchange. So I'll be touching the analysis of exchange rate, but Pgedbm will take up the subject. So when you're dealing with this, my part, I'll be touching the relevant part from the exchange rate as well. So we'll be talking about that as well. So that's the overall. And if you take derivatives, which is a hedging instrument, right? You must have heard that hedging instrument. Hedging instrument is what? Basically, you will negate, or how do I say? You won't be able to completely avoid the risk, but you can minimize the risk. Now, for example, the classic example is insurance. So insurance can be claimed if you meet with an accident. Otherwise, it's an expense. Similarly, derivative instruments are there not to earn profit but to minimize any risk. So this derivative instrument under your syllabus is related to foreign exchange. So the most important and the most popular derivative instrument in Sri Lanka with regard to foreign exchange is forward exchange contract, right? So why I say with regard to foreign exchange, now if you take government securities, there is a credit default swaps. If you take interest rate, there is interest rate swaps, but we'll be not touching much on these. We'll be touching on the derivative instrument which is relevant, which are related to, or which are relevant to foreign exchange transactions, right? So basically, we'll be learning call option, the options. Forward exchange contract is the most popular derivative instrument in Sri Lanka. Then we have options. Then we have futures, right? Option futures. Then we have many things. Call option, put option, and options come. So we will be learning under derivative instrument, and how they are used, to minimize, or the hedging instrument. We call it the hedging instrument. How they are used to hedge your foreign exchange transaction. You know, when you import a vehicle, right? Now forward exchange contracts has been banned now by the central bank. You are not allowed to open. You are not allowed to have this forward exchange contracts from last year, and the central bank has banned it due to this prevailing pandemic situation, due to the additional pressure from the exchange, right? But it is the most popular one. It has been the most popular among Sri Lankans, right? Option is not that popular because we don't have market to cover. If you say very similar to forward exchange contract, but there are special features involving, right? there are special features involved, but I can see now with this share market, the new system came into the share market, DVP, delivery versus payment, right? So what happens is when you sell shares before this DVP came into the scene, if you have shares, if you sell it today, it will go out of your portfolio, but you will be receiving the money T+3, which is not correct, right? So you won't be having the assets once you sold, but the money will not be receiving. Money will be receiving to account after T+3. So basically, with introduction of DVP, it will completely go out. When the security goes out, when the money comes simultaneously, it happens. This has been the case for government security. Government security means what? Treasury bill and treasury bonds. SLDB is another government security issued by the Central Bank of Sri Lanka to get foreign funds or the dollar funds, but that is not scriptless, right? Treasury bill, treasury bonds are scriptless. So now example, now say when you invest in share market, if you purchase shares, you make investment in whatever the share. So say you pay it through a broker, will be learning the procedure, how you have, how do you want to invest, how the investment procedure. So once you make the payment, you don't get anything. Now, for example, say you want to invest in John Keells, you want to purchase shares from John Keells. So you pay it through your broker. So what's the proof you are getting that you have made investment? Nothing. You don't get anything. Right? So you don't know whether your investment has been made or not. How do you get to know? One thing is your check is realized. Right? If you are given a check, once the check is realized, then of course you know that then what happens is you get a board note from the broker. That is the only thing you get it. So CDS account is maintained, everything is recorded there. Now earlier you get a certificate, share certificate. When you invest in shares, you get a share certificate. When you invest in debenture, you get a debenture certificate. Now you don't get any more. So it's scriptless, right? Triple S, scriptless settlement security system. So everything is scriptless, right? So you can't invest in shares. You can't invest in debentures if you don't have what? If you don't have CDS account. Now world has changed now, right? It has changed now. So basically, you need to have CDS account. So everything will be learning. And if you have not still entered into a share market, so this is the opportunity for you to enter into share. I think what a lot of people have made investment. Lot of people have made investment, right? So we'll be learning how do you make an investment in share market, how do you make an investment in debenture, how do you make an investment in treasury bill, how do you make investment in treasury bonds. Like now, for example, now when you receive money from your employer, where do you deposit? Of course, you will be depositing in FD. Or first, it will go to your current or savings account. Once the funds accumulated, you will be investing in FD. But is that only opportunity? Is that only investment opportunity presently you have? Answer is no. So you have a better investment opportunity than FD. Now the treasury bill rates have gone up. So people are moving to treasury bills rather than investing, rather than making or rather than opening FDs in banks, right? And also will be, this is part of the financial assets, the same thing, right? We'll be learning on the financial markets as well. This subject, this topic, and the 7th and 5th standard both going hand in hand. And also you have portfolio management. Portfolio management is what basically now, for example, say you have money, which shares you will be putting, say you have 500,000 rupees with you. So you are wondering, where do I invest? Should I invest in fixed deposit? Should I invest in share? Should I invest in debenture? Should I invest in treasury bill? Should I invest in treasury bond? Many more alternative investment opportunities. But how do you select the best? It's up to you to select the best, right? So, for example, if you say you decided to go to share market, decided to go and invest in share market. Share market investments are very risky, very risky. Why do we say it's risky? Your money can be wiped out instant. So you're thinking that they will invest in John Kill shares, the only example I'm taking, right? You will be investing in John Kill shares and entire 5,000 you invested. Next day, suddenly something has happened, unusual thing happened, collapsed. So finish. You have to wait. Now you know in 2009, when this 30th civil war was over, market went up like nothing. Share market 2009 went up like nothing, right? People who have invested those days made huge profits, right? Would have made huge profit. But after 2014, till 2014, I can still remember the market started to collapse. Now this share market, there can be ups and downs, right? Ups and downs. But only thing, if you think that short-term gains, it is not going to work. So that's why we ask investors to not to invest in the share market with the borrowed funds. When you borrow funds, you'll have to anyway settle it. But if the share prices have not gone, so how do you settle it? The problem. Basically, recommendation goes to the new investors to use their own funds to invest. So otherwise, you'll have to keep it for some time. That's the meaning. So you have to keep it for some time, right? There are a lot of malpractices also going on. We'll be learning what are the malpractices on the share market as well, right? You must have learned inside dealing, front running, pumping and dumping, lot of things, right? So basically, share brokers are doing this, but we'll be learning how to avoid this. Basically, you can't avoid fully. Now, if you ask somebody, if you ask your broker to purchase shares on behalf of you, how do you know that he'll be selling shares? He'll be selling shares to you from his account. How do you know that? You can't. You don't know. You don't know. Basically, there are a lot of malpractices happening, so it's very difficult to control. But I must tell you, SEC has put robust and vigorous regulations on share trading. Share trading. It's very difficult to do manipulation, but you can see some shares are still doing some manipulation. Right? There is no value of some shares. But only thing, when the interest rate go up, when the central bank decides to increase the policy rates. What do you mean by policy rates? Policy rates, basically, there are two rates in Sri Lanka. That is SDR and SLF. Right? Earlier we told repo and reverse repo. Now we tell, okay, we say now the policy rate means repo, SDF and SLF, right? Standard deposit facility rate, standard lending facility rate. What is the meaning of this? UV as standard we know. Anything excess, today's rupee liquidity, you can deposit in central bank. So the banks have, when the banks have excess after the day's operation, where do they put? They have a last resort, which is central bank, to put what rate? 5% now. It was 4.5%. Now it has gone up to 5%. So you will be paid 5% for your excess deposit you place in central bank. If you have money shortage, you will be borrowing from central bank at 6% now. Right? So then you can't go and borrow straight away. You have to keep a security there, which is a government security. That is treasury bill and treasury bond. Whatever you have to keep secret. So basically, if you want to borrow, you should have what then? Investment in treasury bill, treasury bond. Otherwise, you can't go and borrow from the central bank. So if you can't go and borrow from the central bank, where do you borrow? If you have a shortage, you can ask one of the other banks, would you like to lend me? Are you having excess? Would you like to lend me? Then you can discuss with other banks. Now we have commercial banks among system. You can borrow from there. We call this market interbank market. Interbank market. Anybody has excess, they can lend. Anybody can a shortage, they can ask for from the excess bank. So generally, you can have the transaction closed below 6. What is this 6%? That as a last resort, if your bank wants to borrow from central bank, then central bank charging 6% from you overnight, right? Per day. But you can borrow at lower rate in the interbank market. Interbank market, you can borrow at low. Now these days, interbank market is the market liquidity is minus. The meaning is what? Why this has happened? Market liquidity is minus. Why? When this has happened? Recently, central bank increased the policy rates. Right? They have increased the policy rates. Plus, they have increased the SRR, statutory reserve requirement. So what do you mean by statutory reserve requirement? I think you know these things. I'm just refreshing you, right? Anything you have fixed deposit, rupee fixed deposit, you have to keep in the central bank now 4%. So how much left for you to lend? Before this SRR increase, it was 98 by 2%. The 2% you keep it in the central bank, then you have 98 with you, 100 with you. If you have 100 rupee deposit. Now you have 94. Why? You have to keep 4 in the central bank. So what happened? The amount you have to lend has come down. You don't have money to lend. That's what the government expectation. So the government expectation is by increasing SRR is that only. Now you know, as a country, we are expecting a private sector credit growth of 14% this year. Now we have reached to 13% now, 12.9 exactly. So we have 4 months to go, or rather 3 months to 4 months to go. So 1% increase is quite possible. So the central bank has decided to increase the SRR to curtail the credit growth. Curtail the credit growth. So the credit growth has increased drastically. Why? When you have a low regime of interest rate, borrowers are borrowing heavily. So curtail that, central bank or the government decided, so the monetary board has decided to increase the SRR by 2%. And also when you increase the policy rate, of course, your lending rate have to increase. And why? Your borrowing rates also have to increase. Of course, if you increase the deposit rates, your lending rates also have to increase in par with that. So that's what actually happened. Now, at the moment, 2 banks have increased their deposit rates, one state bank and another private bank, but other banks have not increased their deposit rates yet. Right? Still, we can see that. So I think bank will follow that. Everybody will increase in time to come. Right? So basically, you have to curtail your loan growth. All the banks. So by increasing 2%, entire system, to take entire banking system, 175 billion rupees goes out of the system, goes out of the banking system to central bank. So that's why we have market shortage, rupee liquidity. The market does not have rupee liquidity excess. So then every bank has to go and borrow from the central bank window, so as a last resort. Why? There is no interbank market, so nobody has access. No one bank has access. So basically, they have a last resort. Everybody has to go and borrow from the central bank window at 6%. So that's the situation. Now, when you have rupee liquidity shortage, you're comfortable with that. Why? Rupee is the LKR, or the rupee is the Sri Lankan reported currency. So even you have liquidity shortage, you can do what? People are talking about, you can print money. So we don't have much issues on rupee liquidity. Now you know treasury bill, treasury bond options, right? We'll be learning later, but understand now treasury bill, treasury bonds are option based. Now treasury bill, treasury bond, who can be participated? These options, you and I can't. Then who? Banks? All banks are not there. Then who are allowed to participate? Primary dealers. There are 10 primary dealers presently. So they have been given the license to participate at the treasury bill, treasury bond auction. Treasury bill is a weekly auction. Every Wednesday you have auction. Every Wednesday. Every week, provided that no holidays, you have every Wednesday you have auction. The 10 primary dealers are given the license to participate. They will have to participate. They have to put bids on this auction. Treasury bonds, of course, on the requirement. There is no exact date. There is not every month, no. Every week, no. It depends on the requirement, treasury bonds. So what is the difference between treasury bill and treasury bond? Only the time. Treasury bill will finish everything with 3/6/12 within 1 year. Treasury bill 3 months, 6 months, 1 year. But treasury bonds more than 1 year. That's the difference. There are a few differences, coupon rate and everything, which is not available for treasury bonds. But major difference is the time, the tenor. But it does not say that you can't invest in treasury bonds for 3 months. You can do that. You can do that. If it is 6 months, you can invest in treasury bonds. That is not an issue. You can do that. But generally, we say if it is treasury bonds, you have to invest in more than 1 year, 2 years. So capital market instrument. That's all. Treasury bonds are capital market instruments. So all these things you must have heard, but refreshing your memories, right? We must have heard. So perpetual treasury sector, treasury bond scandal letter, everybody knows. Right? You know, but only thing we'll be learning how these treasury bonds are working and the relationship when the interest rate increase by the central bank or the regulator. So the impact of now, so now you see, go and see your balance sheet, your bank or your finance company balance sheet, go and see how much you have investment in treasury bill, how much you have investment in treasury bonds. Huge amount, right? Huge amount. So banks, anyway, you have to do that. Why? As a last resort, if you want to borrow from the central bank, you have to keep this treasury bill, treasury bond as security. If you don't have government securities, then you can't borrow from the central bank. You can't borrow from the central bank. So definitely you should have what? Treasury bill, treasury bond. Now, for example, I told you that only 10 people are there, 10 institutions. There are banks, there are private companies. I have uploaded the advertisement. We will later see, we will later have a look at that. But now, for example, if you say take one bank, now see this one, this is the advertisement. Now these are the 10 primary dealers. Equity, Bank of Ceylon, Capital Alliance is a company, Equity is a company fully owned by the HNB, and Commercial Bank, First Capital, Treasury is a company, NSB Fund Management. NSB Bank is not a primary dealer. NSB Fund Management is a separate subsidiary company, is a primary dealer. People's Bank, Sampath Bank, Ceylon Bank, and Wealth Trust. So these are the only primary dealers presently in Sri Lanka. We had many more, right? We had HSBC here, but later their license was removed. We had perpetual treasuries here. There are no more. We had Entrust securities here. There are no more. Right? Recently, which bank was removed from the list recently? Panacea. And voluntarily they want to withdraw, that is Union Bank. Now so meaning is what? So now I told you, if you want to go and borrow from central bank, you need government securities. These people are allowed to invest in, these people are allowed to go for the auction. So meaning is, what about the DFCC, for example? So how do they make investment in government securities? So if they have a shortage of funds, rupee funds, they, as a last resort, they have to go and borrow from the central bank. But provided now this is not a primary, so then how can they get it? Government securities. Can't they make investment in government securities, treasury bill, treasury bond? They can. How? Now this is what we call, this is primary market. So the central bank and the primary dealers acting as in the primary market. Now, for example, if you say this is regarding government securities, then if you say take shares, if it is an IPO, that's the primary market. Now, when you want to purchase or when you want to invest in shares, if you want to purchase John Keel share, for example, you go and purchase from the CSE, Colombo Stock Exchange. Which market we are operating? Secondary market. So here, this is the primary market with regard to government securities. Is there any secondary market for government securities? Of course, there is a secondary market. Now you and I want to invest in treasury bill. Can I do that? I can. Where do I purchase the treasury bill? Whom should I ask from? One of these primary dealers. So you go and ask equity securities, you need to invest 10,000 rupees in treasury bill. Is it available? 3 months treasury bill with you? They say yes. You go and ask Ceylon Bank, I need to invest treasury bill. Do you have 6 months treasury bill? Yes. They say yes. If they don't have, they say no, but you can. So that is secondary market. That is secondary market. But we'll be learning later by analyzing this, by doing this advertisement. If you have more than 5 million rupees, you can participate at the auction. Even you are an individual through this primary. Same thing happened, the famous bond scandal. So my bid can be routed through one of these primary dealers. That can be done. If I have more than 5 million rupees, I can ask equity securities, I have 5 million rupees. You bid the rate which I say. Mama kiya rate you invest. You put a bid. That is primary market. If I want to purchase the treasury bill from the secondary market, can I dictate my rate? No, I can't. Secondary market is what? After the primary market is over. Now every Wednesday you have auction. Auction bids should be finished by 11 o'clock morning. Then by 2 p.m., 3 p.m. results will be released. That is weighted average treasury bill rate, which is the risk-free rate. What do you mean by risk-free? There is no risk. Do you see any risk in investing in Sri Lankan government? I'm talking about the rupee. No risk at all. When you make an investment in rupees with the Sri Lankan government, there is no risk. How do you make an investment? How do you lend money to Sri Lanka government? These are the instruments. treasury bill and treasury bond. That's all. Can you lend to the government? You can't. You can't lend it to the government. But there is a mode of lending, treasury bill and treasury. Those are the two instruments available, rupee denominated instrument available for people to lend. Basically, treasury bill, treasury bonds are what? Inviting. Now here, RG is here, this one. The general public is invited. You are inviting to public to invest. How? These are the instruments. You are requesting or you are inviting public to invest dollars. What's the instrument? SLDB. SLDB is the only instrument for the local issue, right? ISB is the offshore, local issued instrument for government to take dollar funds. Right? So understand these are the 10 primary dealers available at the moment. At the moment we have 10 primary dealers. These are the people who can be participate at the auction. Right? Now, so that's that. And the portfolio, basically we're talking about portfolio. Portfolio means now if you want to invest in John Keells, you put everything in John Keells shares. Suddenly John Keells made a bad reputation because of someone. What happened? Share prices went down like nothing. There is no realization. To avoid this, now say people who have invested in hotel sector, in the share market, still not booming. We can see some shares are going up, but hotels are closed now, right? If you see the share market daily price list, some shares, some hotel shares are going up, but there is no reason for hotel shares to go up. Do you see any reason for hotel shares to go up? Now this particular hotel is closed. How come then it's a manipulation? One can say it's a manipulation. That's not the manipulation, right? So say people who have invested, your money 500,000, you have invested in shares in hotels. Now hotels closed. Now you made an investment in 2020 February. Corona came into Sri Lanka 2020 March, right? You purchased shares in 2020 February in hotels. Now what happened now? Finish. You can't realize it. You can realize it, but at a loss. So rather than investing in everything in one basket, one share, you should have done what? Diversify. Put some percentage of your 500,000 in hotels, diversified sector, hospitals, but a service sector, banking. So you diversify it. Don't put everything into one. Right? Don't put everything into one. So basically we'll be learning under portfolio theory how this diversification happens. Now you know, you must have heard, you must have learned. There are two types of risk available for us. Systematic risk and unsystematic risk. So the systematic risk is what? Systematic risk is basically common to everybody. Now for example, interest rates, exchange rate. Is it common to everybody or is it common to you and me? Common to everybody. Inflation, common to you and me, everybody. Common. But employee unrest in John Keells example only, right? Employee unrest in John Keells. Is it common to you? Is it common to me? No, I have not made any investment in John Keells, so I don't mind it. It is not any systematic risk. So the systematic risk is common to everybody. So the unsystematic risk is unique to someone. So the systematic risk cannot be avoided. Cannot be avoided. You can't avoid. You can't. But unsystematic risk, of course. What happens when the John Keells employees are having unrest? You withdraw from you sell a joint field share and you put into the private the banking sector. You can diversify the risk. So how the unsystematic risk is diversified through diversification. So how to negate the unsystematic risk basically through diversity. Okay, so we'll be learning later. I'm just giving you a nutshell of the syllabus contents for you. So basically we'll be learning, and that's the theory part also involving in this portfolio theory. Calculation part is also involving. Important for us to learn this especially the portfolio theory, right? So which this is basically we will be learning under portfolio theory which part you will be investing, what percentage of your money will be investing in your in shares or treasury bill, treasury bond, or whatever. If you have a diversified or the huge sample, then which part you select, which part you invest, which part you should not invest. So basically here we'll be understanding. Don't put everything into one basket. Don't put all eggs into one basket. Same thing we will be learning there, right? And mergers and acquisition is a very important new topic added to your syllabus. Added to your syllabus. Mergers and acquisition is a very important topic, right? These days. Now, mergers means what? Two companies are get together. There are two companies, one and B. Company A, company B. You get together and you produce a new one, AB company. So the A company is no more, B company is no more, new company comes into the scene, AB. What do you mean by acquisition? Acquisition means one company acquired by another company. One company acquired by another company. Company A and B, two companies. Company A acquires B. So both the companies existing. So the one company becomes what? Here the example, company A becomes the parent company. Company B becomes subsidiary or associate depending on the percentage you are holding. If it is more than 50%, you become a subsidiary. If you are holding 20%, you become an associate. Less than 20%, you become an only an investor. So we'll be learning. And motives of mergers and valuation techniques also will be learning. How do you value a company? Now, under this valuation techniques, we'll be learning the due diligence part of. Now, when company is going to be acquired, you have to do a due diligence. Due diligence is what? The diagnosis test. So basically, if you want to acquire some company, you should have all kind of information, financial, non-financial, everything on this acquiring. Otherwise, disaster. So who does this due diligence? Basically, the auditors. Basically, the auditors are doing this valuation, due diligence plus valuation. So independent opinion you are getting it. Independent opinion you are getting it. Now understand this. Now say we take John Keels. Now they need to sell this company. So the board of directors of John Keels need to sell this particular company. Do you want to do this valuation? Yes, of course. You have to do this. Why? There are hidden assets. Tell me one or two hidden assets. Goodwill. Where do you record the goodwill? Have you seen any companies recording there in the balance sheet goodwill? This much are goodwill. No. Trademarks and all these other products of John Keels have a tremendous trademark value, right? So you have a separate value for that. So then valuation techniques, when you value a particular company, you include these things as well. You give kind of value to these hidden or not hidden, how to say, unrecorded assets as well, right? So the experience of the staff is another thing. Do you record anything in your? Do you record anything in the balance sheet? Valuation of your capable staff? No. Unrecorded assets. So the valuation is basically coming under everything. So the corporate restructuring is what basically trouble companies, you become a profitable company. When you're making losses, you erode what? Completely you erode the amount you have put as capital. So then how do you make this loss-making companies into profit-making companies? So basically we'll be learning there under balance sheet restructuring. Corporate restructuring means balance sheet restructuring. How do you restructure the balance sheet to become this particular company to a profit-making company, profit-making institution? Right? That is important for us to learn. So basically, I just wanted to give a nutshell on the syllabus topic. Merger and acquisition, yes, portfolio, and market, equity market, capital market, money market, financial markets, pricing of same thing, and derivative instruments. That's what, right? So those are the topics we'll be learning under next couple of days with you. Anything you need to ask, what we have discussed so far, I know. Now this online learning and teaching is not effective. I'm telling you that, right? It is not effective, right? So why do I say so? So basically, I'll be sitting here, but I don't know whether you are available or not. You can later watch this video, I think. But only thing, my request is to participate at the discussion. So this is not going to one-way communication, right? The last year also, we had the same session. So I think we had online. I can't exactly remember how did we have this session. I think they have not done it. So basically, when you now think about the physically, you come into class at this time, completely gone, right? So it's not going to work for you. But you stay at home or wherever convenient time. But I'm requesting you to participate as a discussion. This is you are a big people, right? You have grown people. You are working. You are working somewhere, and I also get something from you for my knowledge, and I'm also giving you the what I have gathered so far, right? So I'm requesting you to participate and please share your thoughts, the things we discussed with you. It's very live they are talking about, right? If you want any time, you just let me know, stop it and have a break, and you can do that, right? I can't see you. But the only thing I'm requesting you to participate at the discussion, then it has, so everybody will be learning then, right? Everybody will be learning. If somebody says something new, any clarification is welcome very much, right? So anything you need to ask, so far we have not started. Only thing I'm just wanted to give you the background of the syllabus content. Anything you need to ask, anything you want to express, or an idea of your idea on anything. So anybody who is here non-banker or not from the financial sector, are there anybody? I think it's no, right? Okay, right. So only thing what I want to tell you is it doesn't matter. It doesn't matter, right? It doesn't matter whatever the things you need to ask. You just ask. It doesn't matter. Yeah, Laksa, you go ahead.
No, I just try to mention that I'm not a banking employee.
No, you're not a banking employee. Anybody who is other than Laksara, are there any non-bankers? Laksara, are you from the financial market too, or completely?
My background is project management. Currently working at CA Sri Lanka Chartered Institute.
Okay.
Yeah, in a project.
Okay, right. Okay, right. So anybody wants to say something? What we have done, what we have discussed so far? So I was told that all are big people here. I think there are 10 people here. Are you clear what we have done? Only thing I gave a nutshell of syllabus contents, what you want to cover with you all. Right. Now say financial markets. If you anytime you just tell me to stop, I will do that, right? Don't worry. Then you make your own comments. It doesn't matter, right? Now before I move into the contents with you all, I just want to give an latest position of interest rates and exchange rate and the economic fundamentals, what's happening around us. That is important for us to learn something or for us to get kind of knowledge what's happening around us. So are you happy? Are you happy with the current environment? So anybody who has any views on the current economic fundamentals, economic activities in Sri Lanka? What is your view on this economic fundamentals, the economic fundamentals in the sense, economic fundamentals, how do you feel it? You can talk about many things, interest rate, the exchange rate, inflation, GDP, uh, remittances, export, import, anything. Anybody who has any idea? Can somebody express your view? Anybody. It doesn't matter. So how do you feel? You as persons or you as employees from financial markets, or you are basically uh, as a layman or a Sri Lankan citizen living in Sri Lanka? How do you feel that? What do you think? Anybody who has any idea? No one has no idea. Yeah, go ahead.
Hello, good afternoon to all.
Good afternoon.
Sir, actually, currently we are having a big shortage of USD funds. That is the main issue. So this will impact in all the imports going forward, including oil and other stuff. So there'll be a shortage in like dal and other stuff which we are importing, as well as it will impact the oil and gas as well. So that's my view. So going forward, there'll be a big problem as a country. I don't know what will be the government do to avoid that. But when it comes to inflows and imports, I think there'll be a big issue in future, and even now it's a problem.
Anybody has different view on that? Or others also have the same? You are feel free to talk. Now, basically, when you talk about foreign exchange, so what Chaturanga said was correct, right? Now you know. Now everybody, almost all the countries in the world are facing to this pandemic. Right now, when 2020 March, when the pandemic came into Sri Lanka, we had several waves. Now we are at the third or whatever the fourth. Right now, 2019, if you can recall what happened in 2019. We had a similar incident. It's the Sunday attack. And if you know this, if you recall this, in 2019, even we had an Easter Sunday attack. Only the only the only the negative impact we had on the remittances, right? Only the negative impact we had on the remittances, where we have 300 million reduction of remittances, which people couldn't send money to Sri Lanka in the month of April and May. But overall, we were okay. If you recall the 2019 January and December exchange rate, we had appreciation of dollars, USD LKR rate. We had appreciation. Even we had less amount of remittances as we expected. Others, of course, export FDIs was perfectly all right, but we had a problem with the remittances. We had a reduction in the remittances. Others were okay. We had a appreciation. But if you think about the 2020 remittances, we had an increase, entire country figure if you take. So the entire amount we have received $7.1 billion. Compared to 2019, 2020, we had 5.8% increase in remittances. But if you talk about exports, if you talk about tourism, if you talk about FDI, right? If you talk about foreign investment in government securities, disaster. Right? The only positive note we had in 2020 was remittance. So why this is happening? So remittances to send to Sri Lanka, people now who sends these remittances? People who are working abroad, right? Sri Lankans working abroad send these remittances to Sri Lanka. So why this has increased by 6%? Suddenly, so those countries also impacted with COVID. And also the people who work abroad came to Sri Lanka as well. That's why suddenly this has happened, you know. A lot of people are sending money to Sri Lanka not through banking channels. Not through, in overseas countries, especially Middle East countries, you have a particular institution called not banks but exchange houses, right? Exchange houses. They are not banks. They are legalized exchange houses. Now, like they accept dollars, they accept whatever their currency, then they convert it to dollars and they send it to Sri Lanka. Or otherwise, they can send it to rupee as well. These are pretty much legalized, right? So the informal channels means what I meant was Hawala. Have you heard this Hawala and Undia? So what happens is now if I want to, I'm abroad. I'm working abroad, so I need to send money to Sri Lanka. I'm going to one of these Hawala guy there, particular country. I give my foreign currency to him, whatever the currency I earn from that currency. Then I ask him to send to my account or my beneficiary rupees. So the foreign currency will not send to Sri Lanka physically or whatever the form. So basically we will, as a country, we will be not receiving foreign currency. So they will ask somebody in Sri Lanka to distribute whatever the rupees to their account or to the personal delivery can be happened. Now in 2020 March onwards, they couldn't do that. Why? Due to this lockdown. So the Undial Hawala didn't work. So the people had to choose to send money to Sri Lanka either through banking channels or through exchange. All these money sent to Sri Lanka was recorded. So that's the main reason why this worker remittances have gone up. That's the only reason we see. Now you see in 2021 July, that was the July figures only central bank has recently released. July month to month, now 2020 July and 2021 July, to take analysis, 35% reduction worker remittance, 35% reduction. If you take overall country, overall amount, 2.6% reduction. I'm sorry, 2.6% increase. Now by up to June, it was increased 11%. Now July end, cumulative figure, January to July, only 2.6%. Why? July, in the month of July 2020 and in the month of July 2021, 35% reduction. So why this? The country is open now. Sri Lanka is open now. So Hawala Undial very much inactive. And also you know what happened this black market, so the curb market, we call informal market. So you have dollars you can exchange into 230 level. Right? Now in 2020, we had a remarkable reduction of imports, oil. Now in 2020, lowest price recorded, the crude oil, 42. Now it has gone up to 76, now 70, 76, 78, 76, 75 levels now. The prices have gone up. Now up to July, it's 50% increase, crude oil bill, to take it. Now entire country, if you take exports, generally we generate 1 billion every month, whereas imports we generate 1.5. So obviously we have current account deficit. We have more imports than exports. So how do you fund this? How do you fund this? Basically, we are funded by way of remittances, investments, FDIs, then what else? Tourism, not there. Everything is not there. So then we have huge trouble. So the supply of dollars are not coming as we expected. Supply of dollars are not coming as we expected. So but demand has escalated. Now how come demand has accelerated? Now we are under import restriction. How come this happened? Even if you put import restriction, if you see the figures compared to 2020, 2021 figures, import figures have gone up. Import figures have gone up. How this has happened? So the one thing is oil prices have moved up, and the other one is the amount we spend on pharmaceutical items drastically increased. It was not there. It was not there. So basically we are suffering from dollar liquidity. So almost all the banks are suffering from dollar liquidity, but our imports have not been reduced. Even we have put a lot of restriction. Now you know, now recently, last week, the bank has put further restriction on imports. Right? So they have put 100% margin is required for you to import anything. If you want to purchase, if you want to import, you have to keep you have to keep whatever the amount in a non-interest bearing. Now say your goods coming after 3 months time, but you have to keep whatever the amount you need to pay for imports in a non-interest bearing account. The huge thing. So basically you will discourage the imports. So the white government has put this restriction suddenly. So the government, now we also saw that a lot of people imported in big quantities, thinking that dollar or the rupee will further depreciate. Now, before this reduction came into the scene, government has, or the central bank has put a exchange rate, buying selling rate. They brought it down to 200 buying, 203 selling. Now this has not an direction. Now before this, whatever this agreement came into the scene, the dollars buying rate was 226 level and selling was 230 level. Now, if you can remember, there was a gentleman agreement among banks by the central bank, intermediate central banks. No banks will sell dollars 200, no banks will sell dollars 203. It's a gentleman agreement, so it's not a direction. Before this recently reduction, right? There was a reduction. There was an agreement. So gentleman agreement. We call it gentleman agreement among bank treasurers. But suddenly it has broken. It has broken. So the banks giving whatever the dollars, whatever the rate they need, and they started to sell whatever the rate they want. So central bank mediation was not that enough, right? So I think it's a Monday evening. Central bank present governor sent a letter to all CEOs of all banks requesting bring down the exchange rate 200 and 203. It's only a letter. It's only a request letter and the requirement. So he said it's a request and the requirement. So basically, from following day onwards, all the banks adhere to this letter, the contents of this letter, not the direction, contents of this letter, and all the banks are now trading at 200, 203. What happened? You are converting your dollars. I'm talking about the exporters. You are converting your dollars, which is in your BFC account, business foreign currency account, to 30 level, to 26 level last week. But suddenly the banks have reduced their conversion rate 200. So how much you lost per dollar? It's 30 rupees loss. 30 rupees loss. So then what happens is, you still think this will further depreciate. So then you don't send money to Sri Lanka. That's what actually happened. So the exchange people who are working abroad reduce their sending money to Sri Lanka, thinking that this rate will further increase or the rupee will further depreciate. So the conversion of export proceeds have stopped virtually, almost stopped virtually, thinking that why you don't convert, thinking that this will further go up. And this is not a direction. If it is not a direction, there can be changes. Now, you know what happens with the interest rate on dollar deposits or foreign currency deposits. Central bank put a direction to say 1 year fixed deposit, all the banks should pay 5% AER, annual effective rate. So basically you have to pay only 5% for the AER. You know AER is, right? Annual effective rate. So it has to be 5% AER for all the deposits. There is a cap on that. There is a cap. Maximum you can pay 5%. For SDA account, special deposit account, you know there is special deposit account. Money, people who also money sent to Sri Lanka, they can open SDA account which pays more than 2%, above 5%. So basically they can have 7%. Anybody can open this SDA account which entitles 1 year, maximum 7% for dollars. Right? Anybody can send money to Sri Lanka through SDA account which can earn 7%. So that is a direction. So all the banks adhering to this. But as I told you, with regard to the exchange rate, 200, 203, the gentleman agreement before they had, foreign banks are not adhering to this. So unless this is not coming through a direction, they will not be adhered to. Local banks adhere, but foreign banks are there in Sri Lanka. They didn't adhere. They did not adhere to that. So that was the problem. So they actually breached it. They actually broke. I think so. They are not bounded to adhere to this kind of gentleman agreements. Otherwise, it does not come to a direction. That's what they have given us. The answer given us by them was that. But this is also not a direction. But all the banks adhered. But foreign banks said governor's letter they can adhere to. That was actually happening. But the amount we received so far through export proceeds, through worker remittances have drastic drop due to this sudden drop, due to this sudden appreciation of dollars. Now this is an appreciation, right? So anything you pay more for whatever the currency, for the other country. Now, for example, we say our reported currency is what? LKR. How much we are paying for $1? Now we take example 200. You pay 200 to acquire $1. Now, before this 200 came into the scene, the banks have been paying 230 level example. So from 230 now it has dropped to 200. Rupee has appreciated. So generally appreciation comes how? Generally appreciation comes how? Now, එක ඩොලර් එකකට ගෙවන රුපියල් ප්‍රමාණය අඩු වෙන්න නම් you should have more what? Dollars. When you have more supply dollars, so everybody is flooded with dollars. Then obviously the amount you charge for $1 is decreasing automatically. That's what actually happened. But this is not the real situation. This is suddenly they do it. Suddenly they did it. So this is not an appreciation. This is not an real appreciation. Now I can remember when once budget was presented by the 2000. I can exactly remember the year. At the budget, the finance minister said 3% devaluation. Now, when the exchange rate is determined by the demand and supply, then we call it what? Depreciation and appreciation. But if you purposely do something, we call it what? Devaluation. Purposely devalue it, not based on the demand and supply. Devaluation. Right? So actually, that was the devaluation proposed. Now, if you do on the demand and supply, that is basically a depreciation or appreciation. Now, in Sri Lanka, we have actually very correctly said we have more demand for dollars than the supply. So obviously, rate is going to depreciate further. Right? Now, before this rupee has brought down to their 200 level, rupee has been depreciated by 2. Now, we started the year at 186. Now, 2021, we started the year USD LKR at 186 level. Now, it has gone up to now recently, the last month, gone up to 199, 13 rupees again. Depreciation active now. Now again, the government will maintain this 200 level end of this month, this year. That's what their expectation. But if the government or if the central bank issue a statement, will be maintaining this rate 200 and 203 level, then this uncertainty will go home. Otherwise, people have more uncertainties in this exchange rate. Right? That was actually happened. So we need to have a central bank intervention. So we expect with the new governor's appointment on the 16th, and there will be something positive thing will happen. I'm expecting that, and also the once this tourism starts, we don't get much expected dollars. And also remember that if you can remember, we have made a settlement of ISB. International Sovereign Bond on the 27th of July, right? We paid this $1 billion sovereign bond with our own funds. We have not reissued. If you see the rates now in this ISB, International Sovereign Bond is what? If you want to raise money from abroad, government, the Sri Lankan government wants to raise money abroad, offshore, then you issue this ISB. So Sri Lankan can't invest. Sri Lankan can't bid. Sri Lankan can't invest in this ISB. Only the foreigners can be participated. Otherwise, if you invest, you don't get fresh money. Now there are 13 billion outstanding at the moment after the settlement of 1 billion on July 27. We have still outstanding $13 billion. If you see the rates of these 13 billion, now we have this 13 billion comes, I think we have 11 number of bonds we have issued with different maturities. If you see this current market yield rates, still double digits. So when we talk about treasury bonds, we'll be learning the price and the yield, the relationship. Price and the yield relationship we'll be learning, right? So what this relationship now still at double digits. So when the price goes up, yield goes up, price come down. That's the pattern. That's the relationship. Meaning relationship is negative. Yield goes up, price comes down. Yield goes up, price comes down. Now, yield has gone up drastically of our ISD. Now, you see, there is a bond to be matured on the 26th, 2026. That is 5-year bond. What's the rate? Yield is 15%. So, anybody can purchase this particular bond, can earn 15% on dollars. Have you heard before? Dollars can be deployed at 15%. It's happening. It's actually happened. It's happening. And if you see the ISB's current yield rates are like that. So why this has happened? Now who has invested in this ISB? Foreigners only. Foreigners only. When the yield goes up, price should come down. So whatever the price, you need to exit. Whatever the price, you need to exit. Why do you exit? Why don't you keep it until it gets matured? Why can't you wait till 2026 until the government pays? You're not sure. Investors are not sure. Why? They think that due to the present situation prevailing in the country, not going to work as you said. Now we have another bonds to be settled in January next year, 500 million, and there is another one to be settled in July. So the entire, if you take entire year, you must have worked, is 5 billion or 4.5 to 5 billion settlement we have to do. Whereas how much reserves we have? We had 2.8 now with this SDR and Bangladesh. So we received Bangladesh 150 out of 200. With this, the amount has gone up. The reserve figure has gone up to 3.5. But we had to make payments of 5 billion next year. So that's the thing. So that's the perception. That's the sentiment foreign investors have on our bonds. So last year all 3 rating agencies downgraded Sri Lanka. Moody's, S&P and Fitch, all 3 rating agencies downgraded. So what do you mean by downgraded? Downgrading means what? Why did they downgrade it? Now say your bank or any institution has rating. What do you mean by this? What does it mean? What is the purpose of having a rating? It says what? It says your ability to repay your borrowings. Triple A is the best. If you are having the triple A rating, means you're perfectly alright with your borrowing settlement. So the downgraded means what? There is a problem. Now, as a country, rating agency is downgraded. Sovereign rating is now triple C, right? If you go down 1 notch, then we are in the default category. So triple C means not the good rating for a country. Very difficult to raise funds abroad if you have a triple C rating. At least you should have double B below. Very difficult to raise funds. Why? Now, Say now, I don't know anything about Sri Lanka. I am a foreign investor. So how do you decide my money will be invested in this government security or this securities? How do you know that? I can ask one of my friends who is in Sri Lanka. That is not a reliable. So tell me independent view. So how do you get foreign investors? How do you get the independent view on Sri Lanka? So for example, take your bank. Now say take one bank. You say commercial bank, and you have one rating, and take another one, CDB, Citizen Development. Two, both are rated, but different ratings. So you have given 1 million rupees to invest either commercial or CDB. You select what and tell me the reasons, the justification why the base for your decision. So somebody says, so the commercial banks pay 10% 1 year, example. CDB pays 12%. You have two options. Which one you select? Some people will select higher yield one, CDB. So if I ask why did you select CDB, I am getting 12%, whereas if I invest in commercial, I am getting 10%. So I'm asking again, are you okay with your money? Yes, I'm okay. This is 1 year investment. That's okay. So if I ask somebody is there, no, I will go for commercial bank 10%. Even I don't mind, even at a lower percent, 10%, 2% reduction, 2% lower than the CDB. I go for the commercial bank. So I'm asking why. I don't mind take this 10%. So I need the assurance. So I think general perception, commercial is viable. Commercial is financial viable than CDB. Example only I'm taking, right? Commercial is financial viable than CDB. So I'm asking, how do you say so? කොහොමද කියන්නේ ඔයා commercial bank financial viable කියලා CDB එකට වඩා? Who said? I'm an outside investor. I don't know what's happening inside commercial bank. I don't know what's happening inside CDB. So then how do you know that? So I go for the independent rating. So the commercial bank has higher rating than the CDB. So I decided to go even at lower yield, thinking that my money will be paid on the maturity. I am more sure, I have a more comfortable investing in commercial bank. Why? I have more certain, I have more reliable than CDB. Commercial bank will pay money on time on the maturity. So that's what. Same thing happened to the foreign investor as well. Same thing. Foreign investors are coming to Sri Lanka based on the credit rating they see. There are ratings of credit rating agencies. They just look at the country's credit rating. They are looking for what is Moody's rating on Sri Lanka, what is S&P's rating on Sri Lanka, what is Fitch ratings on Sri Lanka. Okay, people see, oh, not going to work. So my money is not going to save. So you can say, one can say, no, we don't worry, you invest in Sri Lanka, we will pay you back. Only a word, right? But they go for what? Rating agencies. Rating. So it's very important for a country to improve their credit rating. If you want to go for the international market, you should have what? Proper credit rating. Otherwise, you can't. You can't. So people will not invest. So that's the negativity. That is the negative impact we have. So very difficult to go to the international market and raise funds for Sri Lanka being at the CCC category. Very difficult. Right? Very difficult. So all these things are very now only thing what happens is now with regard to rupee liquidity also the same now government now by implication of this bringing 203 who are benefited. importers are benefited. Importers were paying 230 to acquire 100. Now they pay how much? 203, 203 now. But suddenly the central bank has put a restriction on importation, 100% cash margin. That's a good move. Otherwise, disaster. So it's very important for you to understand this real situation. Now, I think with this vaccination program, once the country is open for tourism, will be a little have a kind of relief, but it takes time for us to come out of this situation. But still, we are under pressure, right, due to this dollar shortage. Only thing we'll have to more improve this our exports. Now, if you see these exports, 80% of this export revenue are imports. If you take garments, we do exports, but 80% of the garments raw material are imported. So then value addition is very marginal. Value additions are very marginal. But if you can now see, if you can expand the markets to our exports, that's what you do. That's what you should do, right? So imagine what are the things we produce inside the country is very amazing. So we don't do anything in our country. Like we have everything in our country, but we don't do anything. So we can utilize very much with this unutilized assets, unutilized not to sell, right? But unutilized precious things we have utilized for exports. But only thing we have to more focus on exports. And with regard to, I think this interest, this exchange rate will prevail for some time. There is a informal market is also going on, but this Hawala and Undial, both methods are presently operating. The amount we receive from worker remittances will be further reduced. We'll see a further reduction in over September month as well. So government is expected towards the year end. Government will be having 7.2, 7.1, which we had this last year, 2020, we had 7.1. The government is expecting same thing will have this year as well. So I don't think that if this Hawala and Undial operating significantly, very difficult to achieve this target. But if you keep this particular exchange rate 200, 203 level for some time, then the participant or the people will be given the message that okay, no, we will be maintaining this rate. So then obviously sometimes there will be a better option as well, right? But then any question you have, any thoughts you have, different thoughts you have? So do you see any green light in future? Only thing is green light we can see tourism. Tourism, once we have the tourism open, and this FDI is very difficult to have. FDI is positive also working on that. And yesterday we had a discussion with Czech Positive managing director, and some people have invested in block of lands. Right? It's going on. Right? It's going on. So basically, I think that is the only hope we have. So if the foreign investors come to Sri Lanka, then if they make some investment in Port City, we're getting that's another expectation we have. And so stabilized exchange rate is very much important. Otherwise, one party will lose. As I told you, 203 exporters will not happy, but importers are happy to maintain this level, right? So stabilized exchange rate is very much important for you to have in the country. Stabilized means not not necessarily beneficial to somebody, not beneficial bad impact to somewhere. So basically, you should have a kind of stabilize area, not undue influence to exporters, not undue influence to importers as well. Now we are an imported-oriented country, not like Japan. If you take Japan, they like their exchange rate to depreciate. US dollar එකට Japanese yen දැන් ගෙවන 109ක්. US dollar එකට Japanese they like US dollar එකට JPY 110 $1 ගෙවන තමයි they like. Why? They are export oriented country. They like to have more exports. So when the exchange depreciate, they get more. So they like exchange depreciate. There are countries. So country-wise, it can be different. We don't like exchange rate to depreciate, rupee to depreciate. Okay, Japan likes. Depending on their target, export-oriented, the import-oriented, it depends. Now, in terms of anything you want to clarify, anything you want to say on this? Any different idea you have? And
so if you don't mind, can you explain again about the Japanese, what they are export-oriented country, and they are looking for the what do you say that? What did you say? The depreciation is important.
Yeah. Now see if we take Sri Lanka, for $1 we pay 200, right? $1 we pay 200 now presently. Now say next day $1 equals 220. Right? There are two instances. $1 equals 220 and $1 equals 230 LKR, USD LKR rate, right? USD LKR, $1 rate we pay 200, and there's another scenario, $1 equals LKR 230. Now you are export. You bring dollars to Sri Lanka or whatever the foreign currency brings to Sri Lanka. You like to have more rupees after you conversion. So if the exchange rate is prevailing at 200, so you brought only $1, example. So then you will be receiving how much after conversion? 200 rupees in your account. But if you have US dollar LTR rate 230, once you convert into $1 into rupees, you get 230 in your account. So which one is more beneficial to you as an exporter? 230. So you as exporter, you like exchange rate to depreciate. You need more. Why? You are exporter. By converting, by doing a conversion into rupees, you get more rupees. Same thing in the Japan as well. Japan is a country who export-oriented country. Vehicle export are the giants in Japan. So the ones who export it. So if your JPY has depreciated, so the $1 you get more JPY. So the USD JPY presently is at 109. Dollar rate JPY 109, but they like USD JPY to go up to 112, 120, 130 level. Why? When you get dollar, you can convert into JPY at a higher amount. So basically, any exporter likes interest of the exchange rate to depreciate. They have countries or the reported currency to depreciate, but importers don't like. They like to pay more. So when the imports you pay more, obviously you will lead to what? Tend to increase the prices of goods and services, especially the goods. So meaning is what? Inflation. That is inflation. So basically you don't like a depreciated exchange rate to have from the viewpoint of import. Understood? So the countries are there exchange rate to, they like exchange rate to depreciate.
It's clear.
Now, anything you wish to clarify? Any ideas different from you? What we have discussed? Anybody who likes to have?
But it is affected to inflation as well, no? But in the currency depreciation, automatically that will be affected to the inflation.
That's true. Now, say when the reported country's currency is depreciated, you have to pay more for imports. Obviously, the amount you pay more will be borne by the innocent consumer. So they don't worry about importers are not worrying about 203 or 230. Whatever the price they take, and they will pass on to the consumer. So the prices of computer, prices of consumer go up. So obviously we'll have to pay more. So obviously when we pay more means what? You pay more for acquire goods and services. The prices of goods and services going up, going up, going up. Inflation. So it's a direct impact to inflation. And also when the government increases their policy rates, recently, policy rates. So the government's expectation was two things. One thing is a reduction of credit growth. The other one is the important one. So when the interest rate goes up, government security interest rates also go up. Right? So treasury bill, treasury bonds rates going up. So can the foreigners invest in government securities? Of course they can. They can. So how does the foreigner invest in government securities in Sri Lanka? Can anybody say how does the foreigner invest in Sri Lanka? Which account they'll have opened in Sri Lanka? How do they bring money to Sri Lanka?
Investment account, investment IIA account.
That's right. That is the account. Earlier it was CI account. Now it's IIA accounts. Right. Anybody who wants to bring money to Sri Lanka, non-resident, they'll have to open IIA account. So IIA account through IIA account, you can make investment you want. Now, when the interest rate goes up, government securities, you intend to foreigners to come to Sri Lanka and invest in government. So thereby, what do you expect? Foreign investment comes to Sri Lanka. That is one expectation. When you increase the interest rate, that is one expectation. Foreigners to come and invest, then you can release the pressure on exchange. Now see, now all these economic fundamentals are the chain effect. Inflation gathas, the interest rate, exchange rate, the GDP growth, the export, everything goes and you can't take one decision isolated. So it will badly impact the other one. So you have to think carefully and take decisions. Very difficult. Now it's very difficult to bear up your decisions sometimes. So basically, you will be penalized, for whoever will be penalized. Sometimes some decisions, right? So what I'm talking about, intention is to increase the foreign investment. But only thing, there are things now. Now, for example, now we at Sri Lanka, after this policy rate increase, government security rates have increased. For 5-year treasury bond, government security, treasury bond, right? There is no risk investing in government security. Government is not, presumption is what? Government is not defaulting. That's assumption. But there are governments who defaulted, different to that. Lebanon defaulted, Greece, Argentina. There are governments, but that is foreign currency. But rupee, talk about, there is no risk of investing. The foreigners come and invest in government securities. Now, before this policy rate increase, 5-year treasury bond was trading at 7.3. 7.3 to 7.5. Now, with this increase, it has gone up to 8.5%. Policy rate has increased by 0.5%, but the ground security rates have increased by more than 1%, close to 1%. That's true, actually. So basically, you are paying for 5-year treasury bond 850, example. Why? That is 5 years. Now, if you take US treasury bill, treasury notes, we call it treasury notes, right? US treasury notes for 5 years, how much they pay? They pay only 0.8%. 10-year, how much they pay? 1.5%. 30-year, how much? 30-year bond. US Treasury 30-year, maturity is 30-year. How much they pay? Yield only 2%, 1.9 exactly. So why we pay how much? For 5 years, 8.5. US Treasury is how much they pay? 30-year, 1.5. It is 2%. Why the foreigners are not coming to Sri Lanka? We pay more. We have never defaulted. The track records are pretty much very good. Why the foreigners are not coming to Sri Lanka? We pay 8.5. Why foreigners are pulling out their investment to US? In 2018, you must have 30 rupee depreciation dollars. So basically, almost all the investors invested in government security and share market pulled out their investment. They invested in they went to US. Why? Still people are investors are investing in US at a lower interest rate. So they know that ability to repay their dues very much high. But we also have. We have never defaulted. Whatever the amount the foreigners ask, we give. Even under tremendous pressure, if somebody comes and asks from IIA account foreigner, he wants to take it out, you are giving, right? Your bank is only give. You can't say I don't have dollars. You can't say that anyway you are giving. So why the people are not coming? Why the investors are not coming? Now see, several methods, several impacts. Now today you invest. You say you bring 1 rupee, $1. You will be converting into 200. How much you will be investing in treasury bill or treasury bond? 200 rupees. Why $1 you brought? You do the conversion. After 5 years, you have this investment plus yield, and you want to take it back to your country. Now you check the exchange rate from the bank manager. Converted what's the rate? 200. Now you check after 5 years you are checking the market. What will be the rate? 250. Example. Is there any chance for us to further appreciate? After 5 years, is there any chance? Can you imagine? Can you visualize 190 level after 5 years time? 195 level after 5 years time? No one thinks. So we think that we have more pressure on the rupee depreciation. So with this 200, you earn interest, everything 250. Your account has credited on the maturity of this particular treasury bond 250. Now you want to take it back to your country after converting into dollars. Now you go to the bank and ask him, how much do you give me? I have 250, I need to convert into dollars. Bank manager says $250. How much you take it? $1. How much you brought here? $1. How much you are taking after 5 years? $1. Will the people come? These are the fundamental things we will have to adjust. But the government has last year, 2020 September, they have introduced a new method that this forex risk is going to be borne by Central Bank of Sri Lanka after stopping. There is a mechanism they introduced, but it didn't work. It didn't work. This was the main reason why the investors didn't come to Sri Lanka, due to this exchange. And we don't have a hedging mechanism. We don't have hedging mechanism. We don't have any mechanism to hedge these unexpected losses. But the government of Sri Lanka, Central Bank, has introduced a method, but it didn't work. Still the mechanism is there, right? Any investor can invest up to 25 billion. Zero sum. So today you converted 200, after 5 years time, same rate you will be converting. So very good opportunity. But still people don't come to Sri Lanka. So here the not coming to Sri Lanka is mainly because of rating agencies downgrade. Rating agencies downgrade. Right? So basically that's what. So with regard to exchange, we can talk about a lot, but only thing, anything you need to clarify, anything you need to say. So I'll be not taking all only things since we are on virtual. No need to have a break in between. We can finish early, right? So even the physical classes are doing the same thing. So you can have your own break, can come, I can see what you are doing, right? So I will continue, then you can, if you want to break, please let me know. So I think it's better we can finish it off, right? Is there anything different, please let me know, right? So basically that's that, and we discussed a lot of fundamental economic factors, and also the finally we will be discussing on the rupee impact. There is a tremendous pressure on the rupee liquidity as well in Sri Lanka now these days, due to the heavy expenditure plus heavy reduction of revenue. So the government actually gets the revenue out of tax revenue. You know, in 2019 in November or December, after this government came into the power, they had a huge reduction of taxes, and the VAT was reduced to 8% from 15%, and also they have widened the threshold limit of income tax, right? And also they have reduced this ESC, and they have abolished this special levy. So a lot of tax reduction, but only thing, the intention was they need to have more people into this tax net, but only thing, unfortunately, we never expected this pandemic 2020 March. So then now the government can't reverse this, government can't increase this tax rate, while everybody is under pressure, everybody is suffering. So the business are not operating as usual. So how can you increase the rate? So basically the government was generating 12% before this tax reduction came into effect on the GDP. The tax revenue is 12% of the GDP, but now the government is getting only 9% from the GDP. So the huge reduction, right? Huge reduction of rupee revenue. So basically, when you have reduction in the rupee revenue, basically you don't have money to spend for primary activities. So the public activities, you don't have money to spend. Public activities, you don't have money to spend. So basically, that's what actually we are suffering, and of course, tax revenue has also gone up. tax revenue has also tax revenue has also came down, has also come down due to this lucrative tax reduction. But government intention, people are criticizing, but I think government's intention was to have more people into this tax net. But only thing due to this, as I told you, this tax, this pandemic couldn't do that. So the annually government is losing 500 billion tax revenue due to this tax reduction. So basically, and also the people who wants to pay direct taxes, that is income tax, also is now basically under now the up to 3 million, 1.5 or 1.5 is exemption, up to 3 million you pay only 6% tax. With this zero tax threshold, you pay only very minimal amount, right? So there are a lot of discussion as well, but the rupee also, as I told you, the market liquidity has come down drastically with this SRR increase, further aggregated, and also you can see now when the interest rate goes up, people are moving to FDs, so the banking products from share market. That's the relationship. But even you increase the deposit rates, even you increase the policy rates, people did not move. Right? People did not move to banking products from share market. People still think that share markets are lucrative business for them to earn profit. So when you invest in shares, what do you get? Dividend plus capital gain. When you invest in FD, what do you get? Only the interest. You don't have capital gain. Only the interest you will be getting on the maturity. But if you invest in shares, you get two things, two compensation for your investment. That is, one thing is capital gain. If the share goes up, then sell it at a higher. Plus, if you hold it, you can get dividend. Two things. If you invest in debenture, what do you get? One thing is coupon interest. The other one is you can sell it, right? Now, if it is 5-year debenture, now recently commercial bank has issued debenture, Basel II compliant, Tier 2. If you invest before 5 years, you can sell it. Why it is listed? You can sell it. There is no much sophisticated market like shares, but still you can sell it. Then you get what? If you sell it at a higher, you get capital gain. But if you invest in FDs, you get only the interest. That's all. That's all. But so that's why people are not shifting from share market to banking products here. So they still believe that share market is lucrative business even at a higher risk. Even at a higher. Now, when you talk about share market, presently now still you see the daily figures foreign outflow. Foreigners are selling. Net figure, their purchases as well, but the net figure is outflow. Net figure is outflow. Right? Net figure is outflow. Basically, so till share market is run by local investors. Share markets are run by local investors. So that is important. Anything you need to further clarify? Any unclear area you need to further clarify? If you have any doubts what we have so far discussed, So then shall we move on to so I'll be starting talk about this one. So we will be learning these things. Basically, we have kind of knowledge, we have touched everything with you, the overall, right? Now I have uploaded now move into this financial market. Now, if you say financial markets, these are the only 5 financial markets available in the world. These are the only 5 financial markets in the world. Now we discussed a lot of products. Now, all these products are coming under one of these 5 markets. Now, see, money market. Money market is what? Money market is the short-term market. So, money market, every instrument will finish within 1 year. So, what are the instruments? Treasury bill. Repo is a product, right? What do you mean by repo? Repo is a product. Banks are offering for short term. So like you know, overnight. Now, FD එකක් අපි overnight දාන්නේ නැහැ. අද දාලා හිට ගන්න නේ FD එකක්. But repo is anything excess you feel like when your bank deposit with the central bank, individual or individual companies also can do the same. They can invest with you overnight, today, per day. How much bank pays you? I'll be excess. Now you know in current accounts there are excess amount which is not interest bearing. If the smart account holder, they will negotiate with the bank on what you call this sweeping facility. Right? So anything left in the current account, the bank has to pay 1 day interest. If you are smart enough, then you will speak to the bank and get the interest on that. So you can have this sweeping facilities from this. And repo is also the similar. Repo is a product where you can invest excess money overnight. Overnight you can have term as well. 2 days, 3 days, 5 days, 1 week, 1 year. Can have it repo. But there is no time limit for repo. Anything excess, you give it to the bank. So the bank will give a security to you. If you have excess money, so it doesn't physically, no need to bring anything available in the current account. If you don't want to have a sweeping facility, then you can invest in repo. So what happens is repo is secure. So the end of the day, you have 10 million rupees in the current account, which is not interest bearing. So then you speak to the bank and you invest in repo, then you get 1 day interest, depending on the rate. For that, you allocated the treasury bill or treasury bond as a security. The securitized deposit. Even for 1 day, it is compulsory for you to allocate the government security. It's compulsory. If you don't allocate, if your bank taking a repo and don't allocate treasury bill or treasury bonds are violation. You know, I don't know whether you can remember the Entrust. Entrust was a primary dealer once. Entrust Securities, have you heard? Sometimes you must have heard. The primary dealer. Then next. So what happened? TV, Ceylon Electricity Board, they did repo, or they have invested their provident funds or the pension fund in Entrust Securities. Why they have done this? Rather than not coming to private the state banks due to the high return. They don't worry about the rating. Now see the difference, right? If you think about the yield only, now classic example is this. People are moving for higher returns only, right? People are moving for high returns only. Now, they invested all their money in the Entrust for high yield. So generally, if it is repo, you should allocate whatever the available security to TV. So then the Entrust bankrupt, you are safe. Your money is why? Security is there. You can sell this security in the market. You can realize whatever the amount you have invested. You can invest. You can invest. You can realize whatever the amount by selling, by disposing the security allocated to you. It is up to you. It is up, in this case, it is up to CB to check whether they have been allocated sufficient amount of treasury bill or treasury bond. How do you get to know? You get a statement. This is the amount you have been allocated. Now they have put term repo, meaning other than 3 months, 6 months. My rate was pretty good. Rate was pretty good. Interest pays a big amount. So they didn't check whether they have been allocated government securities or not. What happened to Entrust? Is Entrust there still? Entrust is no more there. Collapse. Bankrupt. So then they ask their money. No money, nothing. But they are happy. Why? Security has been allocated for them. So they can realize by selling these government securities, treasury bill, treasury bond, you can sell it in the market, secondary market, you can sell it. And you check how much you have been allocated. How much you have been allocated? How much CG has been allocated for their report? Nothing. Nothing has been allocated. What's repo? Fundamentally, if it is repo, primary dealer should allocate some kind of securities. Now you know there is a haircut and all. You can see up Dhamana, you can see the higher you have to allocate. There is a price movement action. Price you can't realize. That's why the government is asking, or the direction is asking to allocate. Now they have changed the system as well. Different tenants, different haircuts, right? Hair, we call it haircut. You should allocate more depending on the market valuation. We say 10% is. But how much they have been allocated? Nothing. Lost. Completely lost. Everything. So they went for what? High yield. But ultimately ended up with what? Zero. You got return monthly or quarterly or semi-annually, whatever. But what happened to the amount you have invested? Nothing. You didn't get anything. Nadu කියන තමයි වෙන්නේ. I think still the case is going on. How can we say? So they have spent the people money unnecessarily. I don't know. I can tell you, but they have invested for special sports activities. Right? They have spent some sport activities and all. Right? That's what I feel. The classic example for defaulting and going by rates only, yield only. So the money market instrument is a short-term instrument. Everything will go wrong within 1 year. Treasury bill, 3 months, 6 months, 1 year. You can't have more than that. Capital market is what? The long term. Capital market is a long-term instrument. Shares is a capital market instrument. Now, do you see any maturity date for shares? So there is no maturity for shares. There is no maturity for shares. Treasury bond, the long term. Do the treasury bond have maturity? Yes. Treasury bonds have maturity. The largest, the longest treasury bond issued 30-year bond. Right? 30-year bond. Now it's not trading. Right? Treasury bonds and debenture is a long-term capital market instrument. It is not there, you can write it down. Debenture is one of the capital market instruments. Shares, debentures and treasury bonds. And corporate bonds is also very similar to debenture. Treasury bonds, very similar to debenture. So the corporate bonds, now treasury bonds are issued by who? Central Bank of Sri Lanka on behalf of the government. Treasury bonds are issued by the Central Bank of Sri Lanka. Now see this one. I'll show it to you. Now, treasury bond, this is the advertisement of treasury bond. Now see. Now, Democratic Socialist Republic of Sri Lanka. Issue of rupees 50 billion or 50,000 million treasury bond. On behalf of who? Democratic Socialist Republic of Sri Lanka. Who issues? Public Debt Department of Sri Lanka. Issuer is public, the Central Bank of Sri Lanka. On behalf of who? The government. Capital market instrument. Now see, this is the advertisement of treasury bill. This is the last week, September 8th advertisement. September 8th is when? Wednesday. Now, this is what kind of market instrument? This is a capital market instrument. Same thing. This is what? This is the advertisement of treasury bill. Treasury bill is what we discussed. Taking money from the public by government. Weekly? Yes. Then auction? Auction based. Who can be participated? These 10 primary dealers can be participated at the primary auction. Every Wednesday you have auction. Every Wednesday. So the every after once you have, if you have Wednesday, T plus 2. After 2 days time you will have the settlement. So the Wednesday report you have to settle it. If your bids are successful, you have to pay money. Bids you should have money. These people, you can't say you don't have money, but you don't have money like you will perpetual treasury channel. They need to have money. Perpetual treasury is asked to put bid on behalf of them through Bank of Ceylon. So the Bank of Ceylon was asked to put bids on behalf of perpetual treasuries. Bank of Ceylon put bids. Bids were successful. After 2 days' time, it's a huge amount, right? After 2 days' time, they'll have to settle. Who has to settle? Who has put bid? Bank of Ceylon. The Bank of Ceylon has to settle. If the bids are put by perpetual treasuries, they didn't have money to settle. It's a huge amount, 13 billion or something. They didn't have money. So they used Bank of Ceylon to put bids on behalf of them. They know that exactly this bid is going to be successful, then they didn't have money to settle. First, we will allow Bank of Ceylon to settle. Later, we will settle phase by phase to Bank of Ceylon. That's what actually happened. They said their system was not functioning. By every day, every Wednesday, I told you, by 11 o'clock, you will have to put all bids. You have to finish putting all bids by 11 o'clock every Wednesday. They said their system was not working. So they told Bank of Ceylon to put bids on behalf of them. But they put September, they have to finish it. They have to finish putting bids. Okay. Right. Now see, every Wednesday you have. Now here the government intended to issue 64 billion. They need to get 64 billion rupees from treasury bills, through treasury bills, from the public. Maturity period 91 days, 3 months, 182 days, 6 months, 364 days, 1 year. Why not 90? Why not 180? Why not 365? Have you seen this before? Advertisement. Anybody who has investment in treasury bill? Anybody who has investment in treasury bill? No one else. So I'm 100% sure you have investment in treasury FDs, rupee FD. Everybody has. You have investment in treasury, the FDs. So what does your bank do? How much you are paying for treasury FDs? 1 year? 5% limit? 5.5. 5.5. How much 1 year treasury bill? More than 6%. So what does your bank do? Taking money from you by paying 5.5%. Investing where? Risk free. Nikan indala. Ganda pulang investment කියම treasury bill treasury. No default. Default is 0. Risk free rate 0. 6% on the loan. So basically banks are doing what? Brokering business. They are doing intermediary job. Now, did you see that earlier commercial bank raised debenture recently? They are taking money from the people and they use it for lending. Now recently, now it is on now, right? Commercial bank, anybody who is working commercial, go and check. Debenture issue is on now. There is 2 categories A and B. One is 5 year and the other one is 6 year. 920, 953 something. I can exactly remember the rate. Paid senior only. Interest is paid senior. So basically that's what actually happens. So basically, they are lending at 10, 11, 12. So all the banks are like that. So the banks are not supposed to make losses. They are not supposed to make losses in any way. So they can easily earn profit, banks, right? So you don't have anybody does not have it. Right? Now see, 91 days, that is the 182 days. That is that central bank is issuing. So we can't do anything. 90 days, 90 days, maybe 91 days. But it has been there for a long time. From the inception, it is 91 days. I don't know why. 90 days, 182 days, 365 days, 364. But if you take bonds, treasury bonds, coupon rate is calculated always actual to actual. Now you know, කවදාවත් අවුරුද්දක් 364 days වලින් ඉවර වෙන්නේ නැහැ. Either 365 or 366 නේ. එහෙමනේ වෙන්නේ සාමාන්‍ය. So then when you calculate, when you're investing in treasury bonds, if you want to get the calculation of coupon, it has to be treasury, it has to be 365. Now, if you take the GBP, now say your bank invests in GBP in other countries, the interest is calculated how? So the denominator is 365. Denominator 365. Dollar 360. Now see the difference. 360. Whatever the number of days divided by 360 for dollars. GBP 365. Right. So basically there can be different mechanism. Right. Now here 364. Now in the exam, if I get a question on calculate the pricing for treasury bill, you should always divide by 364. This is the formula. We have not come to that. Now see, this is the price finding calculation for the treasury bill. You are finding how much do you have to invest now. Now see, this is the question. If 3 months treasury bill, 91 days, yield 6%, so the private dealer pays 6%. What is the price that you should invest to get nominal? So today you invest how much for you to get whatever the percentage. We'll be learning later. Don't worry about. Now see, 364. What I want to tell you is this: if it is a bond, 365, or actual 366. But treasury bill, remember, always, remember the word, always, it should be divided by 364. Don't go wrong, right? Right, this one. Now maturity period is 91, ISIN number. International Security Identification Number. International Security Identification Number. What is this? For you to identify this particular instrument. Why? Every week you have treasury bill. Every week you have treasury bill. So how do you identify that? This is the treasury bill issued by the last week. This is the treasury bill issued by 3rd week of January. How do I identify? By using this. LKA means what? Treasury bill. If it is treasury bond, then what? ISIN number is LKB. ISIN number is LKB. Treasury bonds B, but treasury bills LKA. So in the exam you are given LKA, meaning it's a treasury bill. So what do you mean by 09? Then you have what? L. you can see an English letter L. L is the month of maturity. L is the month of maturity. So basically, by using ISIN number, you can find out the maturity date of the treasury bill or treasury bond. Remember that. It gives a maturity date. It is important. If I get a question on this in the exam, so if somebody asks, find out the maturity date, you should be able to find the maturity date. So how do you find? First, you identify LKA is treasury bill, while LKB is treasury bond. L means what? Month of maturity. L means what? A, B, C, D, E, F, G, H, I, J, K, L. 11. L के ना पूरा alphabetical order देखिए 11 letter नहीं A B C D E F G H I J K L 12 नहीं A B C D E F G H I J 10 A B C D E F G H I J K L 12. I'm sorry. The 12. L means 12. 12th letter of the alphabet. So, on your left hand side, 21, that is the year of maturity. Year of maturity. Right hand side, next to English letter is the maturity date. 091 means the tenor of the particular bill. Understood? Don't worry about the last digit. Last digit is basically denoted by the sequence of a Central Bank of Sri Lanka. We don't need it. So again we are repeating. LKA means treasury bill. 091 means 3 months treasury bill. L means the maturity date of the month. Left hand side of the English letter is the maturity year. Right hand side of the letter is the maturity date. The last digit is immaterial. We don't know, that is the sequence of central bank for them to identify. Moving to next, LKA, treasury bill, 182 days, that we know. So easy method is what? First you go to the English letter. English letter එකට වම් පැත්තේ තියෙන දේ මොකද්ද? year. දකුණු පැත්තේ තියෙන මොකද්ද? අවුරුදු මාසෙ. 182 කියලා කියන්නේ tenor එක. LKA කියලා කියන්නේ මොකද්ද? treasury. Same thing is. C means ABC, that is January, February, March. March 2022 March to 11 is the maturity. From the settlement date of 10 September 2021. ඉඳලා මාස 6ක් තමයි 2022 January, March 11. March 11. දෙදාස් 22 I කියලා කියන්නේ A B C D A B C D E F G H I. That is 9th September. I mean 9th month. දෙදාස් 22 September 9th is the 1 year from 10th September 2020. That is how you interpret. Okay? That is how you interpret. it. Now, understood, right? What is this? Please let us. Now, there is a sentence there, right? So basically, they say this is below this 6.05. So the amount of what 18 billion, 22 billion, and 24 billion, right? Maximum now. Now this has been earlier. This has not been there. Remember, rate has been a option here, right? But this has been there for a long time. 6.05 is the maximum rate. You can't put more than that. You won't get it there. You don't get it if you put maximum 6.05, and you can't put market away rates, right? Market away rates should not be. You can't do that. So basically, you can't put make it a 1 year treasury bill. The market away rate. Same thing happened under perpetual treasury. Market 9%. This guy put when this guy put 12%. Away rates. You can't put away rates. Right? Maximum rates given. So the auction is a Wednesday. If it is not a holiday, then this is going to be a Wednesday. So the Friday is the second. Monday you have to make money. You have to pay the money. You have to make a humble. Closing date can Wednesday, September. After you have to put all bids. This guy has to. These 10 people have to put bids. Minimum amount. Now, this primary dealers, minimum amount is 10% of these, 10% of these, 10% of the issued amount. Why? So that's why they have been given the license to participate at the auction. They make a salina the rates they can't refrain from bidding. In a license. You can't do that. Minimum 10%. So the equity 1,800 you have anyway put. We don't mind the price. We have a price there. Whether you have to pay on Friday. 2,200 you have to put. 2,100 you have to put. So then backers alone has to put 1,800. Every primary dealer has to put 10% minimum. Otherwise there is no competition. Like I told you earlier, if you have more than 5 million rupees individually, you can't invest, you can't participate at this auction, right? You are not a primary dealer. But you can, if you have more than 5 million, you can tell one of these primary dealers to put my bid, put 3 months, mage rate you can tell it. You can tell. You can tell that. So the individual can, so that if somebody asks, can an individual participate at this treasury bill auction? Your answer should be yes, provided you have more than 5 million rupees through primary dealer. You can't, right? Only you can ask primary dealer to put your bid. Right? You can read this, and general public will have to purchase from this one of these primary dealers. Now everything is clear, right? So now this one. Now this is when 8th September. 8th September. Okay. Now 8th September නම් මේකේ result දෙන්න ඕන කවදද? 10 වෙනිදා. අපි settlement date 10. Last week year Friday. අද 12නේ. 10 කියන Friday. So So we'll see the result. This is the result. Treasury bill auction held on 8 September. This is the result. "91 days, 18 billion offered." How much the people? How much private dealers have put bids? 38 billion. How much the government has accepted? 29.869 billion. Government does not need money. මිනිස්සු දාලා ගත්තේ නැහැ. 6 months, 22 billion requirement, but private dealers have put bids 22.050 billion. But how much the government has accepted? Nothing. Meaning is what? Government does not need rupee funds. 364.24 billion requirement, which received 24 billion 60. How much the government accepted? Only 915 million. Total amounted wanted to raise 64 billion. Bids received 84 billion. Accepted only 30, which is below the required amount. What I'm asking is, why this has happened? So the one can say government does not need rupee funds. Is that true? Or is there any other reason? So how do you interpret this? The interpretation is this. Government did not take. Why? 3 months treasury bill they have accepted 29 only. 38 they have put. Why they have accepted more than the requirement? Several questions. They have accepted more than the requirement, but they have accepted less than the offer. See the 6 months? Nothing they have accepted. 22 දැම්ම 22 දුන්නා ගත්තේම නැහැ එකක්වත්. වෙයිට් එකක්. 24 දැම්ම 24 දුන්නා නමුත් ගත්තේ 915. Why? What's the rate? 6.01. Previous week what's the rate? 5.92. What is this rate? Risk-free rate. When investment in government of Sri Lanka in rupee terms, there is no risk. That's true. Risk-free rate. There is no risk is investing in government in rupee funds. Which risk is not there? Default risk is not there. Credit risk is not there. Counterparty risk is not there. Same thing. But is there only risk we need to think about? What about interest rate risk? What about reinvestment risk? What about liquidity risk? All these risks are there, even of this risk-free investment. Remember, treasury bill rates are risk-free rates, true, but which risk is not there? Settlement risk is not there. Counterparty risk is not there. Basically, default risk is not there. Understand very well. We say, when you calculate, I think must have a capital asset pricing model. You take risk-free rate there, risk-free rate. For the risk-free rate, you take what? Treasury bill or treasury bond rate. Why this is risk-free? But which risk is not there? Now, why 6 months treasury bill has not taken by the government? $5.95 was the previous week rate. This 22 billion of bid received have been put more than 5.95. Why? Why? This is after the policy rate increase. When the policy rate increases occur, so the general sentiment is what? In the future, further rate increase may occur. So the people or the primary dealers think in the future, further increase of treasury bill rate may occur. So I will not put at lower rate in this particular bond treasury bill option. 5.92 is the 6.1 0.09 has gone up. 5.90 this has been there. This is the maximum rate. They don't go and buy above 5.96 in the last. So because now this indication was anyway given, right? මෙතන මේ සතියේ ගන්නේ 6.05 වලට is already given. This is published information. Now this advertisement is published on Monday. For the Wednesday auction, Central Bank publishes this advertisement on Monday in papers. So the Monday or tomorrow you get to know what will be the price for 1 year price Wednesday auction. Obviously, I can show it to you. I think if they have, let's see whether they have advertised this. You can get it from the Central Bank website as well. I can show it to you. Notices. It's there. Now see 15. I don't know whether you can see this. 6.12 now. See this week. Can you see 15 means 15 like me badal. What was the last trade? Previous week 6.1. 11 සතිය how much? මේ government ම කියනවා. මේ rate උඩට යනවා කියන එක. 6.12. Then who needs to invest at 3 months 6.01%? Thinking is what? Next week this will further increase. This year 0.1 point මෙතන දැන් මම 6.01 වල දැම්ම නම් මට කීයක් පාඩු? 6.12 වලට ගන්න පුළුවන් එකන්නේ if I invested last week I would have invested at 6.01, whereas if I wait another week now I can invest at 6.12. So who will invest? So the same scenario will be there for actually. Now that's what actually happens actually. People will not invest. They must have put these rates quite high. Quite high rates only they have put. The government does not need to take මේ තරම් උඩ රේට් වලින් ගන්න ඕනේ කියලා ඕනේ නැහැ කියලා හිතුව නිසා තමයි they have rejected this bid. The 6 month treasury bill rates are rejected. Right. So the 1 year of course 6.5 වුණාට මේක උඩ යනවා දැන් 6.115. දැන් 1 year 6.05 වල තමයි last week එක මම ඉන්වෙස්ට් කරන්න මට ඉන්වෙස්ට් කරන්න ඉන්නේ. නමුත් මේ සතිය වෙනකන් හිටියනම් මම කීයද ඉන්වෙස්ට් කරන්නේ දැන්? 1 year 6.12. ඉතින් මම 6.05 වලට ඉන්වෙස්ට් කරනවා 6.12 වලට ඉන්වෙස්ට් කරනවා. My money will be invested at I'm like to have 6.15. So that's what actually happens. We have the 6.05 or so the government does not need to accept. Now some banks, there is a requirement for them to compulsory requirement for them to invest in treasury bill or treasury bond. Example NSD. For the NSD, the rupee deposit when you take it from the public, 40% you have to put in 40 or 60. I think it's 40. 40% you have to put in government securities. The compulsory investment. Now, if you take insurance company, compulsory investments have to be done in government securities. There is a compulsory part for them. So they can ask and tell you, "Ane mage big there thina menna meka dala mata meka primary option එකෙන් අරන් දෙන්න කියලා." That's what actually it happens. Then these are not, people will not buy. Sometimes people will buy. Why? This is more than the FD rate. දැන් 6ක් ගෙවන්නේ නැහැ FD වලට මං කියනවා. Then now bank might have started, but people is now 6 months, 3 months, 6% ගෙවනද your bank for FD? I don't think so. 3 months, but treasury bill pays. And then so obviously we will move into treasury bill. So that threat is there. When the treasury bill goes up, there might be a shift. So that's that. So anything you need to clarify further to understand why people are not invested, thinking that interest rate will go further up. This is the interpretation of advertisement. Right. So anything. So before we wind up today's too much. This is boring for you all. So I think we should not do much for you all. So we start up. Anything you need to further clarify, contents what we have discussed today. So I request you to ask question and get clarified, and your thinking also needed for me to develop. I know it's very boring, right? 1.5 now. This is 1:32. I started 2 o'clock to 5:30. Very difficult. So think about you physically sitting in a class. So this, but definitely you will be getting a 20 minutes break. So you can refresh, but still you feel sleepy, right? Since you're at home, you don't feel it. You feel it. But as I very now, this morning also we had a class, but not that effective. You don't get the recipient feedback. So a lot of people don't talk.
A small clarification, sir.
Yeah.
Sometime back, normally the treasury bill rate was below the bank FD rates. When it comes to risk, since the risk is low, the rate is treasury bill rate was below the bank rate. How come right now it has gone the other way around? Like now the treasury bill rate is higher than the normal FD's rate.
Yeah, now basically now treasury bill, you are very correct. Now treasury bill rates now it's a risk-free rate. Now for example, we say 1 year we show now 6.01%, 0.05%. So any bank, any product, you say FD, any FD, rupee FD product has to be, if it is 1 year, more than 6.05. Why? So the even NSD has triple C. I'm sorry, the triple A. That is the highest rating. Still they are carrying a risk, even fully owned by the government. Two, even they are carrying a risk. That's why you pay more for your fixed deposit. In NSB has the AAA, highest rate. Even they pay more than the fixed the treasury bill rate. Now, when you invest in treasury bill, you're sure of getting whatever the amount you invested. But if you invest in FD, you now say 1 million you invested in NSB. So, for example, hypothetically we say bank collapse, bankrupt. How much you are getting? How much you are getting? Invested in FD 1 million. How much you are getting? Are you getting 1 million or less than that? You are getting less than that. You are getting less than that. How much you are getting? It's only, we say 1.5 million rupees you have invested. Early it was 600. Now it has gone up to 1 million. So remember, even you make a deposit at AAA bank, you don't get the entire amount when they go bankrupt. Under the deposit insurance scheme, you get lesser amount than you invest. That's been 600, now they are increased to 1 million. So remember, so now you have, say 20 million you have invested, collapse, bankrupt, you get maximum 1 million. Maximum you get. But the government is not like that. Government pays you back everything on the maturity. So meaning, no one has above the sovereign rating. No one has above the sovereign rating. You can't have above the sovereign. Sovereign is the foremost rating. You can't have even foreign currency, even local currency, you can't have more than that. Government you can't have rating. So similarly, we say this is a risk-free rate. True. But any investment opportunities, any deposit we make with your bank is risky. Then you should pay more. What's the difference? Now, 6.05, if the treasury bill rate pays, the government pays for treasury bill, obviously you have to pay more for people to attract to your bank. Otherwise, they will move into risk-free rate treasury bill anyway. Say now your bank pays 6.5, example, whereas the treasury bill rate is 6.0. What's the difference? This 0.45% is what we hold. That is risk premium. Anything you pay above the risk-free rate is called risk premium. Common to everybody. So that's why you can't have more than the sovereign. Sovereign government take ratings kisi kenutu udata yanna bæ. Even you are AAA, even you are, I don't know, AAA is the highest, even you are AAA. Can't. So that's why you have to pay more for your deposits. Why? Obviously, whatever the rating you have, think about the rupee deposits, you don't get the everything when you go back. Right? That's the reason. So recently, why the treasury bill rates have increased? Now the policy rates have increased by the government of Central Bank of Sri Lanka. When the policy rate increases means what? SDF and SLF rate increases. The excess amount your bank end of the day excess rupee amount deposit with the central bank. When you deposit with the central bank, your excess amount end of the day, central bank was paying all these days 4.5 before increase of policy rate. Now they pay you how much? 5%. ඉස්සර 4.5 මට ගෙවගෙන හිටියේ. දැන් එයාලා ගෙවනවා මට 5%. They have increased the rate. They have the amount I deposit, my bank deposit with central bank, they pay more. So the people know this. Depositors know. Depositors are asking more. They say what? Policy rates වැඩි කරන්නේ. Why the bank deposit rates වැඩි කරන්නේ නැත තාම? Don't you increase your FD rates? Well, why government has increased rates? Why are you maintaining the same rate? They're asking, right? They know. So obviously you have to increase the deposit. Meaning is what? I told you the background why the central bank has taken decision to increase the policy rate. Various factors we discussed. But obviously, when the government policy rate increases, obviously other banks have to automatically increase. But only two, I told you, only two banks have, only one state bank and another private bank only increase their deposit rates here. But I'm sure they are giving special rates. They are giving special rates more than the listed rate available on the website. They are anyway giving. That's true, but they have not increased the listed rate, circular rate. But they'll have to do that. They'll have to do that. People are asking. Other people will move on to other increased banks. So reason is why the treasury bill rates have increased. Government needs more money. Government needs more money. Now, if the policy rates have not increased, now say policy rates say very correct in hand. But we have seen, you see before this policy rate increase, 0.01%, 0.01% වගේ මේ treasury bill rates tend to increase. පොඩ්ඩ 0.01%. 5.53 දෙපේ 5.54 ඊළඟ සතියේ 0.01. There is an indication given by the central bank in the future there will be a rate hike. Why? Government needs more money to pay. They don't have tax revenue as expected. They need to take money from the public. Public also smart. Why? You increase the rate, we will give you more. Simple. That's why private dealers have put higher rate. Now the offer amount 22 6 months, received 22, but nothing has accepted. Why? Not because of government doesn't need money. Private dealers have put higher rates. They have put higher rates. The government does not need to. Why? Government has to pay for this. Once they take it money, they'll have to pay for the investor. Why does the government pay more? Need money, but they can't pay high interest even. So dilemma. Can't pay more interest, still they need money. So the investors are smart enough. If you want money, pay more. That's why slightly it's week by week it's increasing now. So this 6.05 has next now coming week 1 year rate 6.12. People think, why should I invest this 6.12, 6.12? ඊළඟ week එකේ තව ටිකක් උඩට so I will make the investment that next week after next. So that's the intention. Right? Basically, why the government treasury bill rates are increased? Basically, government needs money. One thing, they pay a little higher to take money, and the other thing is policy rates have increased. Obviously, when the policy rates increase, treasury bill rates automatically should increase. That's what actually happens. Any clarification you need further? Right,
sir. Hello, sir. Sir, I have a question. Sir, there are treasury bill auctions that are operated under price controls. Can you explain what that means? And I think start of September there was a treasury bill auction where it failed and the government had to print money. Can you explain why a treasury bill auction fails like that and how it's operated under price controls?
Yeah, price controls in the sense now basically now you see now government now those days there was no price controls like this. Now in 2019, if you go and see the treasury bill advertisement, there is no cap rate, maximum rate for 3 months, 6 months, 1 year. Now after 2020 January, you can see there were price controls or the yield rates, maximum rate for 3 months, 6 months, 1 year. Both the tenors had price control, but recently they have stick to only 1 year. Recently only they have restrict to 1 year. So basically government needs to still control the interest rate increase. So that's why they have put 6.05 cap rate as it is, but it is also increased. Now see, last day it was 5.90. Now last week, the previous week, one before. Now last week it was 6.05. Next week 6.12. So basically increasing trend is there, but government needs to control. So somebody can say this week 6.05 and next week I think it will go to 7%. So I put my bids at 7%. But does the government allow you to put? No. Government does not allow you to put. Government is allow you to put at 6.12. So that they know, government knows interest rate is going up, but they need to control. Make our Wakkade area, they don't want to allow. Interest rate is tend to go up anyway, it will go up, but control level is to be maintained. They need to control the control level. Now, when the auction is not successful, not successful in the sense what? When the required amount, offered amount not received by the public, obviously it is undersubscribed. What do you do with this remaining balance? Who provides? Central bank has to provide. How does the central bank provide? By printing money. So basically printing money is what? Central bank is investing in government, treasury bill, treasury bonds. That's the money printing. So basically money printing is what? Government or the central bank invests. Central bank puts their money in the treasury bill and treasury bond. That is money printing. So if you see the percentage holding, treasury bill, treasury bond percentage holding of central bank week by week, you can see an increase. The central bank doesn't have money. So they just put the money in the auction. They don't put in the auction, then later only they put it. They put, if you ask central bank to put money, meaning you're printing money and investing in government. Otherwise, you can't just print and put it to the public. It won't happen, right? Generally, the layman we see when you print money means money print color, you keep it and you release it to the market. It won't happen. So that's why we are still under control of our inflation. So you see CCPI and NCPI slightly increased only. 6.01, 6.08 it has increased. Only the decimal points in increase. Because 1%, 2% like it didn't increase. Only a decimal points only increase in terms of inflation. That's the reason. If they print money, the printed money, if they put it out to the public usage, then disaster. But it won't happen. This money printing is basically funding to the unsubscribed amount of treasury bill and treasury bonds. So that's what the money printing government does at the moment. That is the MMT. What do you call MMT? Money market theory. Modern money market theory. That's it. Any further clarification anybody wants to? Hope I have answered your questions. Right, then since you don't have, I think I answered your questions, right?
Yes, sir. Thank you.
Since you don't have any further clarification, we will wind up the class from this point. We will continue from next week where we stop, right? Thank you very much for your participation.